Hey, hi, this is Kirubakaran Rajendran. Welcome to Trading with Groww channel. In this video, we're going to talk about RSI trading strategy, but not the traditional way where you see 70 and 30 levels. If the market is above RSI 70, it is considered to be overbought zone. And if the RSI is below 30, it is considered to be in oversold zone. This is the traditional approach. We are not going to trade in this segment. Instead, we are going to combine a combination of two different indicators where one is going to help you out in identifying where the market is going to go, and the second indicator is going to tell you when to enter and when to exit. This way you are going to get a better results compared to the normal traditional RSI system. So RSI denotes relative strength index that calculates what is the last 14 period movements in the markets, and accordingly the overall oscillator oscillates between 0 to 100, where it keeps fluctuating between this range. So when you imply rules only specific to RSI, the problem is market can be in overbought zone for a prolonged period of time and market can be in oversold zone for a prolonged period of time. So RSI basically helps you to treat a mean reversion system, where if the market is in this specific zone, it will tend to revert to mean. So that is what the RSI is primarily for. But here, instead of applying a mean reversion rule to the RSI indicator strategy, we are going to apply a trend following system. Let us see how you can apply a trend following system to a RSI indicator strategy. If you observe the markets, most of the time the maximum risk reward ratio will be possible only during the reversal criteria. For an example, if the market is in downtrend and suddenly if it starts reversing, and that is when exactly when you get in, you have the high risk reward potential. Similarly, if the market is moving up and starts declining, and exactly at the top when it starts declining, if you short the markets, your risk reward ratio is higher. So we are going to identify this potential turning point and then going to enter into the markets. So how do we identify these turning points? So let me explain that with an example. So this is Bank Nifty daily chart where I have plotted the Bank Nifty spot. So by looking at the price, you can see market was in uptrend and then again it was in downtrend for some time. So these things you are able to see it, right? So this is where the market moves up and again market moves down and again it keeps moving up. So directly looking at the price, and sometimes you can go long and sometimes you can go short, but it is difficult to identify precisely when to go long and when to go short, because the market can be in uptrend for some time and can be in downtrend for some time. So how do we identify these reversal points? Like it was going down and suddenly from here it starts moving up, and similarly it was going up and from here it starts moving down. So how do we identify these reversal points so that we can get the direction right? So first, let me apply RSI indicator here. So once you type RSI, you will get this relative strength index where it is going to plot the default 14 period RSI, where you have these three levels, where the upper level is 70 and the lower level is 30 and mid level is 50. So as you could see, what we have to identify is we are going to identify certain specific reversals that is going to happen on not on the price but on the RSI levels. See, if you see this level where RSI moved above 70 and then started going down. Similarly, in this level where RSI went below the oversold region and then started moving up. And again, there were another instance where market was moving up, was above this overbought region, but then started declining. But the price did not decline. So what we have to identify is, forget the price for now. On a daily time frame, identify the reversals with RSI first. Find out where the RSI is reversing after crossing the overbought region or oversold region. That is when we are going to get into a trade. For an example, this way where for an example, consider this place where after December 19. So consider this. So after December 19, market went down and again it crossed above this overbought region and then started going down. So from 29th December onwards, the RSI is in downtrend range, which means that the RSI is declining, going down. So when this goes down, what we have to feel is, okay, instead of going long in the markets, we have to go only short. So how do we identify when to go short? So this is when we are going to use the Supertrend indicator. So from the daily chart, this has told me that after December 19th, RSI has gone below 70, like it closed above 70 and then went below. So when it closed above and then went below, which means that the direction has changed. So from 29th December onwards, what I'm going to do is on an intraday basis, whenever there is a sell signal, I'm going to take. Whenever there is a buy signal, I'm going to avoid it. So what I'm going to do is I'll just change, close this RSI and change it to 5 minutes. So I'm going to 29th December. Yeah. So from this time onwards, so from 29th December onwards, whenever there is a sell, I'm going to execute. How do I identify the sell? Is apply the super trend indicator. So now if you could see from 29th onwards, whenever there is a buy signal, it is not giving us good profits. But whenever there is sell signal, it is giving us huge profit where you are able to completely ride the trend, where you can simply short Bank Nifty futures or you can simply buy Bank Nifty put option. So whenever this RSI is on a downward range after going above 70 and coming below 70 on a daily time frame, just shift to 5 minutes time frame on Bank Nifty, whatever the index that you're going to trade, apply super trend and take only the sell signals. As you can clearly see, these whenever a buy signal happens, again the market starts going down. But whenever sell signal happens, it is able to ride the trend completely. So again you see there is a buy signal, but again there was a sell signal. So which where you were exactly able to identify the moment it starts going downtrend, the super trend changes from buy to sell, and you are going to exactly at the top you are able to buy a put option or short the markets where you can completely ride the downtrend. So this is how you can identify the reversals using RSI. So it is like one indicator is going to tell you go this way or go that way, and the other indicator is going to tell you when to take that move. So this is how you can apply both super trend indicator and RSI indicator to identify when to go short in the markets when RSI crosses above 70 and goes below 70. Exactly at the top, you are trying to gauge the trend and enter into the markets by going short or going long. So whenever RSI goes above 70 and goes below 70, all you have to do is just take short signals or just buy put options whenever super trend gives you a sell signal. So let us see when you can take buy signals. Okay, again I've applied the RSI turning points, right? So earlier we applied the turning points here where from 29th December onwards it was going down. Now let us go to this October level where from October 26th onwards it went below RSI 30 and then started moving up above RSI 30. So which means that the market was in oversold region. Now it is gone. So it is trying to get back into the zone. So from 27th of October onwards, the market was below 30 and now crossed above 30. So which means that market starts its bulling phase, and now it is better to go long than to go short. So what you have to do is from this level, from 27th October onwards, go to intraday time frame and apply super trend indicator and see whenever market gives you buy signal, just buy that, and whenever market gives you a sell signal, the super trend gives you sell signal, just ignore that. If you do that, then there is a probability of making higher profits through this buy trades, where whenever the sell signal happens, it ended up avoiding, it ended up in a false breakout zone. So it is much better to trade this way. So identify the RSI where whenever there is a reversal point in RSI, go back to intraday time frame in 5 minutes, use the super trend indicator and go for only buy signals. Now let us see how the buy signal helped in super trend. So now it is October 30 where we saw that as per the RSI daily chart, after October 27th, RSI moved below 30 and then crossed above 30. So we are entering into a buy signals whenever super trend gives buy. So on October 30, initially it gave sell signal which we would have not taken, and then we would have taken only the buy trend, and that gave us a very good profit. So where around 42,600 it gave buy, and it gave the exit around 43,000. So almost now you were able to gain 400 or 500 points of overall profits just by using this buy signal. So just like earlier how I said, when RSI is above 70 and goes below 70, you will be taking only sell trades, and buy trade you will be avoiding it to escape from the false breakout. Similarly, when RSI is below 30 and starts moving above 30, you are eliminating all the short trades and only buying entering the buying trades. So if you see here, the super trend has given a sell signal here, and that ended up as a false breakout, because after October 27th onwards we are going to take only buy trades. So by excluding this sell signal, you are avoiding a losses. And even this buy trade, when it gave a buy signal around this level, which is around 43,000 level, it gave you a buy signal. And from 43,000, if you could see, it went all the way from 43,000 to 43,650. So almost 600 points you are able to ride the complete trend. So whenever you see these kind of reversals, you are sticking to only one side of the trade, whether you are going to go long or go short, which will be decided not based on just the super trend. It will be based on the RSI indicator on a daily time frame. That is going to tell you whether you should go long or you should go short. So when you trade this kind of systems, you don't need to worry about the stop loss to be fixed on RSI, because your exit criteria is directly based on the super trend. When super trend gives you buy, you're going to buy it, and that helps you to trial automatically. And also when it gives you sell, you're going to come out of it. So this way you don't need to worry about target, you don't need to worry about trailing stop loss, you don't need to worry about stop loss, because the signal is totally predefined by the super trend. All you have to find out is where the RSI is currently on a daily time frame, and accordingly wait for the reversals to happen and then get into a trade. So currently RSI is between 70 to 30. So it is neither up. Say suppose if you are going to enter into a trade tomorrow, you are currently you are at this date where 12th of January, this is where RSI is trading. So now what you have to do is, you are not going to make any trades. You just have to wait for the market to either move up above 70 and then move down, or it has to go down further below 30 and then starts moving up. This is when you can take the trade. Until then you can just wait and watch for the signal to appear from the RSI. So this is how you can totally avoid the normal traditional approach of RSI methods, which specifically focuses only on the overbought region and oversold region. By explaining what I've did in this video, where you can combine two different indicators and then try to go into the direction of the overall market trend, you would be easily able to avoid all the false breakouts. So I hope you found this video really helpful. I'll see you guys next week with another video. Bye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.